Hello, fellow midlifers. Welcome back to the channel. My first rental returned about 28% per year over the first 5 years. But when I factored in selling costs, that drops to about 21%. I received some really great comments from my last video on the performance of my first rental after 5 years. And so I thought today I should make a video comparing the performance of my first 5 years with my rental, my first rental, the first 5 years versus the stock market. This is actually something that I've been thinking about myself lately, so I had fun creating this content. What if I had just taken that same $29,500 that I invested in my first rental and invested it in the stock market instead? Would all the time, effort, and stress of owning a rental actually be worth it? That's what we're going to break down today, and we're going to use real numbers. If you're new here, I'm Jean. I'm documenting my investing journey and sharing the wins, the mistakes, and everything in between. And my goal is to really try to keep it real and hopefully help somebody who hears this content. So let's start with the rental. I bought my first rental at 40. The purchase price was $123,000. All in, my total investment was $29,500. This was 5 years ago in 2021. This was a turnkey property. And there are three main ways this investment has made money. First is cash flow, and I would argue this is the most important metric for me. Over 5 years, this property generated about $15,000 in total cash flow. If you'd like a more detailed breakdown of the cash flow per year, feel free to check out my prior videos. I'll leave links in the description below. That's roughly about a 10% annual return on my initial investment. The second way that this property made money was through appreciation. According to Zillow, the property is now worth about $170,000. So that's about $47,000 in appreciation. Now, quick disclaimer, Zillow is just an estimate. This could be off by a couple thousand, but it gives us a reasonable ballpark. And the third way that this has made money is loan paydown. My loan went from $98,400 in 2021 down to about $88,600 today. So about $9,800 in principal was paid off. If we add all that up, cash flow plus appreciation plus loan paydown, that's about $71,893 in total gain. And that comes out to roughly a 28% annual return. That's pretty amazing. Now, before we compare this to the stock market, there's something really important to call out. This return is leveraged. I only invested $29,500, but I controlled a $123,000 asset. That leverage is a big reason why real estate returns can look so strong compared to stocks. But leverage works both ways. Leverage magnifies returns, but also compounds risk. So it's just something to keep in mind. Now let's compare that to the stock market. Instead of buying this rental, I invested that same $29,500 into an S&P 500 index fund, like SPY maybe, on April 7, 2021. Here's what would have happened. SPY went from about 380 to about 659 after exactly 5 years. That's a 73% price return. So that 29,500 would have grown to around 51,000. If we include the dividends, the ending value is closer to about 54,000. That's roughly a 13% annual return. And of course, that's completely passive. No tenants, no vacancies, no property managers, nothing. One thing to call out on this return is that this is above average returns. We have been in an incredibly strong bull market in the past 5 years. So at this point, real estate is clearly winning, but this is where things get more realistic. Let's say I actually sell the property today. This is something I completely underestimated when I started: transaction costs. If I sell the property, and let's say I sell it, market is not doing that great, and I sell it for 5,000 less than what Zillow says, I sell it for 165,000, I would have to pay broker's commissions, closing costs, maybe even touch it up a little. So assume that it would cost me about 8% in selling costs. That's about 13,200 in costs right there. After paying off the loan, I'd walk away with about 63,200. Then we add the 15,000 in cash flow I already received, and the total value comes out to be about 78,000. Now, when you calculate the return based on that, the annual return drops from 28% down to about 21.5%. Still very good, but that's a big difference. That one transaction alone shaved off about 7% annually. And that $13,000 transaction cost is almost half of my original investment. If I sold SPY, I just press a button. That's it. Transaction costs are basically negligible. Quick note on taxes. Real estate gets more complicated. If I sell, I'm dealing with capital gains and depreciation recapture, unless I do a 1031 exchange where I can defer taxes. Stocks are simpler, mostly just capital gains. The exact impact depends on your situation, so I'm not including taxes in this comparison. So what's the takeaway? For this specific deal, real estate outperformed the stock market, even after accounting for selling costs. But it came with a trade-off. This was not passive. I have dealt with property managers, vacancies, tenant issues, turnover, and just the general drama that comes with rentals, especially being out of state. It didn't take over my life, but it definitely took time, energy, and mental bandwidth. On the flip side, SPY would have quietly grown to about 54,000 with zero effort. That's the definition of passive. And a 13% annual return for doing absolutely nothing, that's pretty incredible. So for me, the difference is this. Real estate can give you higher returns, but it requires more work, more complexity, more risk, and higher transaction costs. Stocks are simpler, more liquid, and truly passive, but with lower returns in this case. If I knew 5 years ago what I know now, would I still do this deal? Yeah, I would. I learned a lot. I got comfortable being uncomfortable, and I saw firsthand how powerful leverage cash flow and long-term holds can be. But I'd definitely be more cautious going into the next deal. I also held on to it for 5 years. If I sold it earlier, we could be looking at completely different returns. The returns might be closer to the stock market, or maybe in some cases might even have underperformed the stock market. For now, I'm holding on to this property. The plan is at least 10 years, maybe 15 or 20. From what I hear, real estate gets better with time, and at the 5-year mark, I'm starting to see some light. If you're in midlife trying to decide between real estate and stocks, there's really no perfect answer. The real question is this: do you want to maximize returns, or do you want to maximize simplicity? If this helped you, I'd appreciate a like and hope you'd consider subscribing. Thanks so much for watching, and I'll see you in the next one.